Think you know Bitcoin? Think again. Michael Saylor is here to completely change the way you see it. In today's video, we're diving into the real truth about Bitcoin. And trust me, it's not what you think. For starters, did you know that Bitcoin's growth is like a speeding train, racing 60 miles per hour every single year? It's not some random spike. Bitcoin is growing at an insane pace, and understanding this will change your view forever. But here's the kicker. Bitcoin's wild swings? They're not a bug, they're a feature. Michael Saylor explains why this volatility is actually a sign of Bitcoin's power in the market, not a weakness. If you've been thinking Bitcoin's unpredictable behavior is a problem, you might just be missing the point. And finally, think of Bitcoin like the fire inside a jet engine. It doesn't go out, and it's built to power the future of finance. Just like engineers keep fire controlled in engines, Bitcoin solves big problems for the global economy. It's more than just an investment, it's the future of money. So buckle up, because in this video, we're uncovering why Bitcoin is not what you think, and Michael Saylor's insights will blow your mind. Let's dive into the real truth about Bitcoin.
The risk-free rate for Bitcoin, as I just described it to you, 29% over 21 years, about 30%. So the way I look at investments is when you're pitching me an investment idea, I say, well, I've got a lot of money in Bitcoin and I'm expecting about 30% risk-free for the next 20 years. You have to actually pitch me an idea that generates more than 30%, plus the risk premium, plus the tax efficiency. If you told me, here's a thing that'll make me 50% a year, but it was going to be taxable, that might be 40% a year or 35% a year. And I'm like, well, after the risk, it's still not as good as my risk-free rate of 30%. So if you're capitalized on Bitcoin, if you understand it, and if you understand, if you have a long time horizon, if you're going to hold it more than 4 years, you don't care about the volatility. All you care about is the annualized return. The annualized return.
Hold on, because there's
right?
a lot of assumptions in there. So I know a lot of people are clutching their pearls right now about Bitcoin being referred to as risk-free. So can you break down for us the difference between that volatility and then how you can have the confidence to look at this and say, no, the risk is merely a timeline question? Because I think a lot of people will take exception to that.
Yeah, so, well, the dollar is zero ARR, zero volatility. That is to say, the dollar goes up 0% against itself each year, and the dollar is zero volatility against itself each year. So if you're on the dollar, you're living in flat land, and you're a stationary person in flat land, a pedestrian in flat land. Bitcoin is going up 60% a year against the dollar. How long? Well, since MicroStrategy made its first investment 4 years ago, it's 60%. But if you stretch back 6, 8, 10 years, I think it's also 60%. So like a decade. But you can measure it back a decade and you see it's going up 60% a year. And it's 60 volatility. It's a 60 vol against the dollar. So you should think of Bitcoin as an asset. It's like you're on a speeding train going 60 miles an hour. And you've got a flywheel spinning 60 RPM. And the pedestrian on flat land is standing on the plane watching the train go by, thinking this is scary. It's going to suck the oxygen out of my lungs. And they're thinking, my money isn't an asset because it goes up 0% a year. So they have a different view toward money than the view of someone on the Bitcoin train. The person with $1 million of cash is going to have $1 million of cash in a decade. A person with $1 million of Bitcoin is going to double their capital every 18 months if they just hold on to it, right? And so they're going to double it once, twice, 3, 4 times at that rate. Howard Marks would say volatility is not risk. Volatility is volatility, right? A merry-go-round, or a carnival ride or a roller coaster is volatile. The risk part is if you fly off the roller coaster, right? If the merry-go-round stops working, etc. So the fundamental risk of Bitcoin is the existential risk of an extinction level event and Bitcoin, right? If space aliens come down and say, we're taking your Bitcoin away from you, right? Then I guess there's risk. If some evil genius finds a way to create a cyber virus that infects and destroys the Bitcoin network instantly, irrevocably, that is the risk. So, but that's kind of like that's the existential risk you take when you get on the airplane. If it crashes, that's the existential risk you take when you cross the street. That's the existential risk you take when you put a piece of food in your mouth. And I say, and you say, well, can you imagine that hurting me? And I say, yeah, if I put poison in the food, you're dead. But I want to give you an example of a physical metaphor. I'm a hiker and I come across a mountain lake, and the mountain lake has 500 trillion gallons of water in it. And yeah, I don't know how it got there, but it's there. The water's chilly, it's clear. And I look down and there's a waterfall coming off the mountain lake. And the waterfall, it's very beautiful and it's very turbulent, right? Water is turbulent in a waterfall. Water is not turbulent in a glassy lake. So the turbulence is volatility, right? And there's waterfall. And then I look at it. And now if you look and you say, I don't know why that water falls downhill. I don't know if it'll keep falling downhill, but I hate the volatility. Then I guess you can take a selfie in front of the lake, go swimming, get cold and leave. But let's say you're not a tourist, but you're an engineer. So you come across the same lake and you see the waterfall and you see the 500 trillion gallons and you think about gravity and you think about sunlight. And now I know how the water got there. The water got there because the sun shone on the ocean. The water evaporated from the ocean. It rose up in the clouds. The wind blew it against the mountain. It condensed and it rained into the mountain, and the water ran off the mountain into the mountain lake. I know how it got there. And then I think, well, if I create a dam near that waterfall, I build myself a dam, I put a turbine on the dam, and then I drop 1 billion gallons of water. I channel 1 billion gallons of water through the dam, drop it 60 feet. And then I plug that into a hydroelectric power plant. I spin the dynamo, I make electricity. And then if I'm really smart, I run the electric power line to a village down in the valley and I light up the village or I light up the city. Now, someone can come along that doesn't understand physics and they can say, good idea, Junior, but what are you going to do when the water stops flowing downhill? Well, I'm like, well, I actually think the water's flowing downhill because of gravity. Newton solved that for me. And then someone else comes along and says, good idea, Junior, but what are you going to do when you run out of water in the lake? I'm like, well, there's 500 trillion gallons, and I take out my calculator and 1 billion gallons or whatever. It's going to last a long time. Like, well, it's eventually going to run out. I say, well, the sun keeps shining on the ocean and the ocean keeps lifting the water out of the ocean and it drops it on this mountain. And that's why there's water in the mountain. But you're right. There's some kind of natural limit. And I suppose there's a limit to the amount of energy I can pull off of this dam, but it's a large number. It's a lot more than your donkey cart. And it's a lot more than your steam, wood stove. And it's a lot more than your coal power plant. And maybe it's a lot cleaner than burning, gasoline. So I'm an engineer and you're seeing performance thinking it's random and that's why it's going to stop. And you're seeing volatility and you're thinking it's random and maybe it'll stop. And here with Bitcoin, the reason Bitcoin's performing is A, it's volatile, but B, it's a more energy efficient state. The water is flowing down 5,000 feet because it's a lower energy state 1,000 feet below the mountain. It's a lower energy state. You've got potential energy in the water and it wants to go to ground, and that's just physics. The 500 trillion gallons of water is $500 trillion. And the $500 trillion of assets are sitting in real estate and currency and sovereign bonds and corporate bonds and artwork and equity. And they're invested in the stock of a company in Africa that's going bankrupt, right? They're invested in real estate in Cuba, in Venezuela, in Nigeria. They're sitting in a warehouse that's crumbling. It's got a 40-year life. And so entropy and inflation, you invested $100 billion in a war zone, and then a war broke out, and your asset got devalued. All of the things going on in the world, the war, the chaos, the competition, the inflation, the entropy, the passage of time, the hurricane, the COVID, vaccine, the COVID virus, all of these things impaired the value of your assets. The reason Bitcoin is going up, it's not an accident. It's because capital is economic mass. It is flowing from a high energy state, the mountaintop, to a lower energy state, to a more efficient state. It is steam condensing to water, condensing to ice, giving off energy, just like in any chemistry lab, you would learn this. And at the same time, there's this volatility driver, Tom, which is you have an open capital market, and on Saturday night, when there's a missile crisis, someone can make a $10 billion short bet, levered up 100 to 1, and panic. And they can do it in Bitcoin. And then on Sunday morning, when the missile crisis has passed and nuclear war did not break out, they can go long and they can reverse the trade. And Bitcoin's the only asset where you can sell $1 billion of it in a minute at 100 to 1 leverage, and you can buy $1 billion back in a minute with 100 to 1 leverage on Saturday night and Sunday morning. If you could do that with your Upper East Side apartment, then property values in the Upper East Side would also be more volatile. And if you could do it with Picasso's, that would be more volatile. Because if people get drunk and they panic and they short your asset 100 to 1 and change their mind 6 hours later when they get up with the hangover, you're going to have volatility. So the volatility is a feature. It's not a bug. It's because it's the most useful thing in the world from a capital market point of view. And if it is that useful, then a Bloomberg jockey in Singapore is going to raise $20 billion in capital, and they're going to make it available for you to trade on Saturday night, or they're going to make $10 billion of credit available to you on Sunday morning because they're getting paid an obscene fee to do it. And once you understand the asset's appreciating because it is thermodynamically sound and it represents a lower, more efficient energy state for capital or for money. And once you understand it's volatile because the network is more useful and more leverageable, it is basically the number one. It is the number one source of credit or leverage in the world for everybody all the time. And once you understand it like that, you see the volatility and the performance are a feature of the engineering and the technology. They're not a happenstance. They're not accidental. They're going to continue in the same way that water will flow downhill. And, just like the normie that sees a fire and it's like, I'm going to harness the fire and I'm going to sell it. And the normie goes, well, what if the fire goes out? And the engineer goes, I'm actually going to create a machine, an internal combustion engine with 8 cylinders, and the fire's not going to go out. And don't you see how the 6-year-old Boy Scout, like the fire goes out, and then Henry Ford creates a machine such that the fire doesn't go out? And when you get on a jet airplane and fly across the Atlantic for 12 hours, do you realize that your life depends upon the fire not going out in the jet engine, and you're surely dead? You will freeze to death before you happen to suffocate should that fire go out. And engineers solve that problem for you. And so the difference between fear and risk and anxiety and competence and commitment is understanding the physics and the engineering of the money involved. Bitcoin is the first perfect money, the first monetary instrument in the history of the world that is a properly engineered store of value. the second best money is gold, and the second best money has a half-life of 30 years, and the first best money has a half-life of forever. And so the first best is so much better. Of course, intelligent physicists, economists that understand physics, or capitalists that understand physics are going to discover that. And as they discover that, they're going to buy it and build an industry around it and recapitalize on it. And they're going to draw concentric circles of other investors that I basically channel billions of dollars into the Bitcoin ecosystem, Tom, from investors that don't understand Bitcoin. They just want to do convertible arbitrage, or they want to do option trading. There are a lot of people that hate Bitcoin, and they come into the ecosystem because they just want to short my stock. So they short my stock and buy Bitcoin and create demand for Bitcoin, you see. So those are all secondary and tertiary investors. They have capital, they have money, and they want to play some game, whether it's short, long, trading, fixed income. People that have bought my bonds and they just wanted interest on the bonds, and they indirectly funded Bitcoin. So my company is an actor to recruit other investors. Anybody else in the ecosystem is recruiting other investors. But the fundamental physics of this equation is, this is the world's first perfect money. That's Bitcoin, the asset, and Bitcoin, the network, is the greatest global open capital network in the world. It is free digital capital, 24/7, 365. 1,500 crypto exchanges are plugged into it, and it is the #1 source of credit, and capital access everywhere in the world right now. And so that's why it is performing. That's why it's attracting capital.
When I think about what the stock market is and why the rich get richer and the poor get poorer, a substantive part of this is that this is an extremely complicated game that, as many times as I've researched you and followed this, I'm just now beginning to put all the pieces together of how this all actually works. But there is this incredible opportunity that, like you said, if you've got somebody that really understands the economics and the physics of it all, there's an opportunity that's staring everybody in the face. You guys have built in a layer that the analogy that you use of turning crude crypto money into refined capital equities, absolutely brilliant. And so you guys have set up what I think of, and you didn't say one way or the other if this felt right to you, but it continues to feel right to me, is you've taken a microcosm of the entire equities financial market, all the ways, my words, that people are able to bet on equities, and backed it by Bitcoin, allowing people this incredible, again, my words, casino layer on top of Bitcoin, so that people can take the kind of risk that they're comfortable taking, that the governance bodies of their organizations force them to interface in that way. I mean, it's just absolutely brilliant. So now my question becomes, given the freakish success that you've had with this, that one, at least I look into the future and say, okay, this is going to keep going for a while. Were you shocked when Microsoft voted against, and I know you were not presenting them to do the full casino layer, my words, on top of the Bitcoin, but were you shocked that even just getting them to think of recapitalizing in Bitcoin was so soundly rejected? Did you just look at that and say, they're stupid, they don't get it? Like, what's happening?
We say in Bitcoin that Bitcoin's on a need-to-know basis. So the people that get Bitcoin because they need to. If you're wet, freezing to death, and you walk past a fire, you're going to stop, throw a log on the fire, and you're going to dry your clothes, because otherwise you're going to freeze to death. You have a need to know it. If, on the other hand, you're a rich man and you have, a massive ski chalet in Aspen with 10 people working for you and modern heating and air conditioning and a chef, and 3 cars and a helicopter in the back, and you've got a dinner party planned and you're walking past a little flickering fire, you're probably going to think I should put it out. You know, I'm probably going to step on that fire because it looks like a threat to me. Microsoft is probably one of the 5 most successful companies in the world out of 50,000 publicly traded companies and 400 million private companies. They're not exactly the shivering, naked, starving dude running through the forest on the mountainside, right? They don't need it. It's quite optional for them, right? The people that discover Bitcoin are when you live in Nigeria and the bank or Lebanon and the bank freezes your assets and you're either going to starve to death and be bankrupt or you're going to have learned about Bitcoin. They have a need to know. If you live in a hyperinflating economy in Russia or in Venezuela or in Argentina, you're going to know. If you remember your family fleeing Nazi Germany in the 30s and losing everything, if that story's been told to you by your grandfather or your great-grandmother, right, then that resonates and you think, I think I'd like to be able to flee with my money, you know, when the government goes bad on me. So I think that the message of this is shareholders in a well-run public company do whatever management tells them because they're not looking to pick a fight. The network reward is a function of the block rewards of the miners, and they will continue between now and the year 2140, and the transaction fees. And the transaction fee economy is an open free market economy. If you want your transaction to be processed in the next 10 minutes, you have to be the high bidder. And there's only 5,000 slots. And so the most important 5,000 transactions in the world are going to get to the top of the queue based upon the transaction fee of the broadcaster. This is why it's important to have scarce block space, because as long as the block space is scarce, the transaction fees will trend up over time. And as more people want to do more transactions, they will bid up the transaction fees. And right now, they're a small fraction of the rewards, but I think 10 years from now, they'll be the majority of the rewards for sure. And I think by 2035 and onward, most of the revenue that comes from the miners will be based on transaction fees. And transaction fees are a durable business model forever. I mean, every real estate company, every financial service provider, they all work on transaction fees. I mean, it's fine. Like, I want to move $1 billion from point A to point B. Would I pay $10? Of course I would. Would I pay $100? Sure. If you wanted to buy $1 billion building and take clear title of it in Manhattan, what do you think the transaction fees are on that? Right? I mean, you could spend $1 million to move $1 billion. You could easily spend 10 basis points. How about the last time you sold your house? What's the transaction fees to sell a house to someone else? And how long does it take, by the way? Right? So when you think about it that way, like if I could sell my house in 30 days and it was $1 million house, would I pay 1%, 2%, 3%, 4% interest or in fees? Yeah, I would. If I paid 1% fees, I think that's cheap. Well, 1% fees on $1 million transfer of Bitcoin, right? That's going to support the network. So the beauty is, I don't think the transaction, I think Bitcoin's always going to be 100 times to 1,000 times more efficient to transact in than other instruments. Then I would acknowledge it's a problem for the human race. It's a problem for every government, every company, every individual. Because if I really can crack cryptography, that means everything that's digital in your life is now at risk. That means I can launch, nuclear weapons. That means I can take over the government. That means I can have the Interpol kick your door in and shoot you with a fake arrest warrant, right? So the point really is all of civilization breaks down into chaos if Dr. Evil gets the hypothetical quantum computer that really does work. Let's imagine that threat. What's my response? The response is obvious, which is every computer scientist on the planet has a vested interest in upgrading the cryptography that we use to secure our networks and our systems. We will do that. If the quantum computer, the quantum chip that Google offered actually threatened cryptography, Google's own engineers would be releasing a set of upgrades to their own encryption, and they'd be huddled with Microsoft engineers right now, because Google and Microsoft would be the two biggest losers. And if they didn't, Zuckerberg would be doing it at Meta. So ultimately, it's not a Bitcoin specific thing. It's a human race specific thing. And let's just reframe it as, what happens if we come up with a computer that can break our current SHA-256, techniques, or our current cryptography? And the answer is, we're going to upgrade it. We'll upgrade the software. Bitcoin is at its core, it's a protocol. Like English, like math. If I come up with a way to hack your phone and send a message from you to the government saying you're going to topple the government, I have corrupted your communication technique, but you're not going to abandon English, are you? Right? And if I come up with a protocol to basically put false numbers into your database, that doesn't mean you're going to abandon base 10 math. I mean, Bitcoin is a bunch of honest people, smart money. They all decided that they were going to store their money in a bank in cyberspace that they trust. The bank is getting upgraded all the time. The software is upgraded every year. The hardware is upgraded every year. And so the implementation of the protocol will change over time. And if there is a quantum threat, we will react to the quantum threat, just like if you were to go to the Microsoft shareholder meeting and said, hey, I heard Google just released the quantum chip and it looks like it's going to crack your cryptography, and therefore should I sell my Microsoft stock and buy quantum yo-yo stock? I bet you Satya Nadella would say, no, don't buy quantum yo-yo stock, because it's an overdone fear, and quantum yo-yo doesn't actually have the support of every company on earth, and doesn't have a multi-trillion dollar market cap, and it doesn't have all of our engineers, and everybody on earth hasn't decided to standardize their office products on quantum yo-yo whatever stock. They're using Microsoft. Don't worry, we're adults. If it does become a threat in the future, we'll upgrade our software to deal with the threat when it happens. For now, the reason people buy Bitcoin is it's better monetary protocol. And the reason that they use Google is it's a better search engine. And the reason they use Microsoft is it's a better enterprise software suite. All three of them have to deal with this uncertain thing we call the future. And I think that they'll probably figure it out. If they don't figure it out, right, then they'll be replaced with something better. But I put my money on Bitcoin first, because the protocols, whether it's the metric system or the English language or base 10 math or Bitcoin, those protocols, they're the most durable thing in the human race, and they will outlast the companies and the countries. Bitcoin isn't medium exchange. It isn't a currency. It's capital. It's digital gold. What the government ought to do is sell their gold. They have $600 billion of gold. They ought to just sell it and buy Bitcoin with it. And you could buy 20 or 25% of the Bitcoin network with the proceeds from selling the gold. The goal ought to be for the US just to buy 4 or 5 million Bitcoin. After you do that, you've demonetized the gold network. So the gold network is the 19th century world reserve capital network. You might as well just sell it all. The people that will own it will be the enemies of the United States. And the gold network will go from being worth $20 trillion to being worth $4 trillion or $3 trillion. You'll just drive it into the ground. Gold will go to $200-300 an ounce. And anybody holding gold as a reserve asset is bankrupted, or has a worthless rock, just a shiny, heavy rock. and you're buying Bitcoin in the swap, and then Bitcoin goes to hundreds of trillions of dollars a coin, and you end up with $50 trillion to $100 trillion of capital. And then what happens in the US? The US becomes the economic leader of the world for the next 100 years. We're the richest country in the world. We negate the entire debt. If you generate a $50 trillion capital gain with Bitcoin, you offset the existing national debt, and you become a net creditor nation, and the dollar permeates everywhere. I think Bitcoin soared up, then it crashed on the Chinese.
Yeah, China ban.
First the China ban, and then there was the environmental ESG FUD.
Right, Elon discovered that it used electricity all of a sudden.
Yeah, we fought our way through that, and then it surged back up again, and then we went into the crypto winter, and we fell from 66,000 to 16,000. And so that 80% drawdown, I think that was, the big test, because it shook out the tourists, and it also shook out everyone that didn't know how to manage a capital structure. So, the poorly capitalized, entities that had lots of credit risk and had unhealthy leverage got taken out. And there was a lot of forced liquidation and panic selling of Bitcoin that took us to the 66,000. And you just had to grit your teeth and get through that. And I would say, that was sort of the low point, right around the point where Silvergate Bank failed, or it was
like Q1 2023.
Yeah, from FTX to Silvergate Bank. And it was also sad. I mean, a lot of poorly run companies failed because they were poorly run. But then there were a lot of good companies. I thought, Signature, Silvergate were forced out of business to no fault of their own. They just, they were caught in choke point 2.0, and that was somewhere between tragic and distasteful.
Let's kick things off with Bitcoin's incredible recovery. The approval of ETFs and the halving event created a perfect storm. This move tightened Bitcoin's supply and gave it more legitimacy as an asset. This helped build confidence and gave the market serious momentum.
I think we crawled out of the valley of the crypto winter, and we crawled, recovered back into the 30s or the 40s, and then I think we got into 2024, and I think in 2024, we started with some cautious optimism, Bitcoin grinding up, a lot of questions about the rest of the digital assets economy, but Bitcoin, recovering from the bottom on its own without help from anybody. And then we got the approval of the spot Bitcoin ETFs, and then we had the halving, and the consequences of the halving were a number of things. One, there was a big secular rotation of capital from a bunch of Bitcoin miners to MicroStrategy. The options market in Bitcoin moved from the miners to MicroStrategy. So all of a sudden, MicroStrategy emerged as a leading volatility, liquidity trade in the crypto ecosystem. And we became aware of that. And I think the second thing is 450 Bitcoin a day, which is $45 million a day of selling, got taken out of the market. And so the supply tightened, and the natural supply tightened. The market matured. The ETFs legitimized.
Next, let's talk politics. Bitcoin found an unlikely ally when Donald Trump invested. Michael Saylor put it this way: Trump embraced Bitcoin, and the crypto community embraced Trump. This connection pushed Bitcoin to the mainstream, causing some big market shifts.
The summer where the Trump campaign, first of all, caught a huge amount of electricity in the greater political economy. And then Trump embraced Bitcoin and embraced crypto, and the crypto community and the Bitcoin community embraced Trump. That took us into the November 5th elections. And
MicroStrategy made headlines with their groundbreaking 21 billion plan. Saylor described it as a crypto reactor fueled by Bitcoin. This bold strategy has become a key part of the company and changed the way businesses think about financial innovations.
On October 30th, MicroStrategy announced our 21-21 plan. We had basically gone and done one convert, a second convert, a third convert, a fourth convert, and a few $1 billion of ATM issuance. So we had raised quite a bit of capital, but we were doing it piecemeal, quarter by quarter, and we decided it was time for us to be more strategic. So we announced a $21 billion equity shelf registration and a $21 billion fixed income plan over 3 years. That was the biggest equity shelf registration in the history of capital markets. So no one ever sold $21 billion of equity like that, ever, right? And that kind of flies past some people because it's like, what I'm saying is like out of every company, ever.
Right.
Never done before.
The Bitcoin demand and the Bitcoin company did it.
Yeah, one Bitcoin company did it. And of course, we did it because we have the world's best use of proceeds, right? The first time in human history, you have a commodity that returns higher than the S&P with higher volatility than the S&P. So you have 60 vol, 60 ARR on Bitcoin going for many years versus 15 for the S&P. Now you had a commodity, high vol, high performance. You can put 100% of your balance sheet. Well, that means in theory, you can issue infinite equity, right? I mean, as long as you can return more than the S&P. Every other commodity, I mean, real estate, art, gold, it's 10 vol, 10 ARR, 7 vol, 7 ARR, 5. So everything other than Bitcoin was always less than the cost of capital. MicroStrategy, we kind of discovered a crypto reactor that could be fueled by Bitcoin, and we put a crypto reactor in the middle of our company. It's kind of like turning on a nuclear reactor or putting an internal combustion engine in a horseless carriage. And that's what we learned in 2024. And we came in October 30th and we said, this is what we're going to do. And that was very well received by the capital markets. That was a big success.
Yeah.
And the day after we did that, our stock outperformed every Magnificent Seven company, and our stock outperformed every Bitcoin company and outperformed Bitcoin. And that was a very important signal to the market, which is the capital market's going to line up behind an operating company to pursue a Bitcoin treasury strategy.
November 5 was the historic day of Bitcoin. The political landscape shifted, turning challenges into opportunities. Saylor explained how Bitcoin skyrocketed from 68,000 to over 100,000, driven by newfound market confidence. It was an exciting time for investors everywhere.
So we were ready to go. The market kind of started to take off, and then we get to November 5th. And at 8 p.m. on November 5th, Bitcoin is high 60s, and nobody knows whether it's going to be a blue sweep or a red sweep or a red and white and blue or a split. And really the timeline is, if you get a blue wave, Bitcoin's going to grind up 20 to 40% a year against resistance. The rest of the digital assets industry is going to trade sideways, under onslaught, gradually, and who knows? Hoping, just fighting on.
Could be bad, yeah.
Yeah, it could be bad. But with a red wave, and by 8 a.m. the next morning, we knew there was a red sweep of Congress, the Senate, the House, and the White House. At that point, Bitcoin is going to surge up 40, 60, 80%. The digital assets industry has a new lease on life. Now you're going to get a digital assets framework. You're going to get an end to the war on crypto. We don't know what it means, but we know that the alternative was fight on a guerrilla war that's very painful, a war of attrition.
Yeah.
And now what you've got is a favorable tax regime, a favorable, a low regulation regime, a pro-crypto regime, a pro-Bitcoin, regime, and also the dominoes start to fall. Bitcoin surges up, and it goes from 69 to today we're plus 100. So I don't have to say the implication of that to everybody, right?
Right.
MicroStrategy did not stop there. They raised the impressive $13.5 billion in just 4 weeks and bought nearly 150,000 Bitcoins. This was the biggest purchase ever, and it proved just how much momentum Bitcoin has gained. Want to stay on top of the Bitcoin trend like this? Make sure you hit the subscribe button for more updates.
We took 30 years to accumulate 500 million in capital, which we invested by September, October of 2020. We took 4 years grinding away through the crypto winter to find another $10 billion of capital to invest in Bitcoin. And then the next 4 weeks of November, we raised $13.5 billion of capital. So, and in November, we bought nearly like 150,000 Bitcoin.
It was your biggest slug of Bitcoin ever added.
There were 15,000 Bitcoin mined in the month of November.
Right. About
And
10
so
times that.
when you start to work through the math of what's going on here, you can see the political landscape changed. The headwinds became tailwinds. The capital markets aligned. They're aligning behind the ETF providers. I mean, BlackRock has had record flows,
Incredible, yeah.
right? And MicroStrategy has record flows. Our option interest surged to like $100 billion.
Right.
And our liquidity surged to the point where we're the number 3 stock after Nvidia and after Tesla.
Even global leader taking notice. Jerome Powell was quoted saying, "The consensus is building. This is a global monetary asset. If it's not going to zero, it's going to a million." This shows that Bitcoin is no longer just for tech enthusiasts. It's being recognized as a major player in the financial world.
And so the capital markets discovered and supported Bitcoin, the political system did, and now we're starting to see the dominoes fall. I mean, the favorable comments by Jerome Powell, not a surprise.
Right. He's a smart guy. I mean,
and everybody else, you can see at this point the consensus is building. This is a global monetary asset. It is worthy of attention. If it's not going to zero, it's going to a million.
yep.
Finally, let's look at MicroStrategy's zero coupon bond strategy. Well, that was a mouthful. They initially aimed for 1.75 billion, but ended up raising 3 billion. This move broke records and cemented their confidence in Bitcoin's bright future.
Zero coupon, up 55 points, and we started looking to raise 1.75 billion, which is twice as big as our previous largest convert. We started twice as big, and it became $3 billion by the time we finished.
And you've already raised 13 out of the 42. That's 30% over 3 years, though. Aren't you ahead of schedule? Like, or what is your pacing going to look like, you think?
Yeah, we are ahead of schedule, but there are a lot of unknowns on October 30th. We weren't sure how enthusiastically the capital markets would embrace us. You've got the convertible investors. You've also got the equity investors. You've also got the options traders. So we have many constituencies. So we had to see how they would react, and that was a big thumbs up from all of them.
Mm-hmm.
And then we didn't really know the outcome of the election, and I really do think the red sweep on November 5th is probably the single most important thing that's happened, maybe to the entire crypto economy in the history of the economy.
Michael Saylor sees Bitcoin's volatility as a spinning flywheel, a source of energy. When prices move up and down, smart investors can harness that energy to fuel growth. To Saylor, volatility isn't a risk, it's a tool.
On October 30th, we laid out our treasury strategy. And our treasury strategy it looks like this. You've got a crypto commodity called Bitcoin, which is 60 ARR, 60 volatility, okay, 60-60. Okay, the performance, the 60 ARR, that's a form of energy. And then the volatility is another form of energy. It's kind of like potential and kinetic energy, or you could think of it as, you got a train moving 60 miles an hour and you got a flywheel spinning 60 RPM on the train, and that's your energy. Okay, so that's what's coming out of the crypto economy and the macro economy. There's a drive shaft, and that's being driven into the spot ETFs. And if you wrap it with IBIT or FBTC, you can buy 60/60, right, in the form of security, or you can buy 60/60 in the form of a commodity. MicroStrategy, as an operating company, what we're doing is we're stepping that up and we're stepping that down, right? So some people want what they want is 25% of the return of Bitcoin. And you would think, well, you're crazy. Well, they'd rather have 15 ARR, 5 vol, no risk, or be 10x over collateralized, right? Just give me 15%, but tell me there's a very, very small chance I don't get my principal back. Some people want 15. By the way, the entire S&P index is people buying 15.
Right.
Right. All you got to do is take 75% of Bitcoin away, and you can create 15, which is $100 trillion market right now.
Saylor compares financial engineering to a car engine. Instead of putting out the fire, volatility, he believes in supercharging it. By channeling Bitcoin price swing, investors can turn unpredictability into wealth. If you want Bitcoin videos, don't forget to subscribe to this channel and hit the bell.
So stripping the volatility out of the business is like spraying the fire with a fire extinguisher, or literally, you're not pouring gas on the flame, you're pouring water on the flame intentionally, right? Whereas what we're doing is pouring gasoline on the flame. If you ever study an internal combustion engine and look at how it works, the point is to channel and compress, turbocharge, the fire.
And direct it.
Not put it out.
Right.
Right, so there's a big market, a $300 trillion market for fixed income, coupon generating, principal protected, low volatility instruments. There's another massive market, $100 trillion market for equity like S&P, SPY, Vanguard 500, QQQ, that kind of, something that gives you 15, just beat the S&P performance. And if you do it with less vol or less risk, then why don't I just give you trillions of that? So there's that market. Then there's the Bitcoin market, which is, I want Bitcoin upside. And of course there's $100 billion now, I guess, in that market right now.
Here's a bold idea. Saylor strategy offers Bitcoin's upside without the risk of a crash. Even if Bitcoin drops 90%, investors still get paid. A win-win that maximizes gains while reducing risk.
Like my advice, what I say to them, they don't take my advice. It's okay, not everybody's got to do their thing. The short's got to be short, the long's got to be long, the trader's got to trade, right? The haters got to hate, the maxis are going to maxi, everybody's going to do their thing, that's fine. But what I say to them is, this is like 75% Bitcoin upside. Actually, it's like 70% MicroStrategy upside. It's 100% Bitcoin upside, no downside. Right? Like, that is to say, if Bitcoin crashed 90% tomorrow, you're still getting paid. Bitcoin could go down 95% tomorrow and stay there for 5 years. You're still getting paid. It's like, you're already hedged. You're already 10x over collateralized. Why are you hedging it again?
Yeah, it's interesting.
Right? But there are some people that do they double hedge it. So there's a group of people that buy that convert, and they just buy the convert, they're already hedged, and they outperform Bitcoin without the risk. There's other people that, by the way, that's one type of view. There are other people, they don't want to take the risk for an hour. Like, literally the afternoon they're buying the bond. When the stock's moving around, they're buying 50 million, shorting 40 million minute by minute. They don't even want to take an afternoon of risk.
Right.
But that's okay. So I think that it's a long-winded answer to your question, but we're just going to provide securities to every pool of capital. If what you want is that instrument, if we think it's good for our common stock shareholders, we'll sell it. Ultimately, there's a lot of instruments we could create that are kind of dilutive to us, so we're not going to. But, you know, there's the dude that wants investment grade fixed income, guaranteed coupon, 10x over collateralized with a bit of boost past that. We're going to give them their thing.
Saylor calls his company a crypto reactor built by Bitcoin. By making Bitcoin the center of his financial model, he taps into its full potential as a power source for growth.
You got to be 100% Bitcoin. Like, the reason we can do it is because we are $40 billion of Bitcoin capital, 60 or $50 million of USD.
Mm-hmm.
And nothing of anything else. No real estate, no other coin, no other good idea. The thing that I try to get across to people with the laser eyes and the focus is sometimes the least risky thing is not to diversify.
Right.
When you've got an engineering solution, when you're building an airplane and someone says aluminum is the right metal, diversifying into copper, bronze, steel, and aluminum doesn't make the plane less risky. Right? You don't need, it's not like this, everybody's got to have their turn. We gotta like use a little bit of art and a little bit of real estate and a little bit of gold, a little bit of Bitcoin and a little bit of NVIDIA stock, right? That doesn't work. It breaks the machine, right? It's the homogeneity of the fuel, right? We don't put 16 different types of radioactive elements into the, pick the thing, engineer the reactor for the thing, You put dirty fuel into the yacht, the engine fouls. You put dirty gasoline into the car, it fouls, right? So you have to engineer the reactor in the right way. And it's like the Austrians would say about money. Any amount will do. You just have to pick the money, right? Right? Bimetallism, silver and gold, is a recipe to disaster. Pick one. Focus on it. So what we've done is we've focused on Bitcoin. We've created a Bitcoin treasury company. It's a crypto reactor with Bitcoin as the fuel. Because we do that, we can give our converts the highest performance of any convertible bonds. And we can give our fixed income the highest performance of any fixed income. And we can give homogeneous credit and transparency. And here's the other point I make. A lot of times people come and they're like, I want to do the Bitcoin standard thing. You don't want to be 72% Bitcoin with 30% hedges on to generate guaranteed yield. You want to be 150% Bitcoin, no hedges on, because you're robbing the investor of their opportunity when you put your hedges on. There's a concept in system dynamics and political economies, the shifting of the burden to the intervener. Okay? It's like, because you chose to do it, I don't have to. Okay, so when I give you a 150% Bitcoin company and I don't hedge it and I tell you I'm not going to hedge it, you don't believe me for a while. You're going to rug pull me. You're going to take profits. You're going to, right? It takes a long time for people to trust you, right? But your best chance to get people to trust you is if you're laser-like focused and committed and transparent and you never break faith with them. They're like, by the way, this is tough love. When Bitcoin trades down 80% and you wanted me to bail out, I didn't. I'm sorry. All those bondholders, they came to me when the bonds were trading 30 cents and 40 cents and they wanted me to issue equity to buy them back. I said, no, we're keeping our position. They said, well, this is a big opportunity for you. You could buy these bonds back below par. I said, no, this is a big opportunity for you. You're the convertible bond investor. You have to buy bonds with your capital for a living. That's your opportunity. My job is to issue the securities and stay long Bitcoin, buy Bitcoin, hold the Bitcoin, manage the structure, don't get liquidated. That's my job. Your job is to buy the equity, or if you don't want to buy the equity, buy the bonds. The short story is the bonds went from 30 to 300.
Right.
Like they were screaming home runs.
Saylor sees Bitcoin as a game-changing asset. He says if a company like Microsoft used its cash to buy Bitcoin, it could add $150 per share and $1 trillion to its market cap.
When you recapitalize on BTC, now let's take that excess cash. If Microsoft takes their excess cash and buys Bitcoin, they add $150 a share and $1 trillion to the market cap. They don't even have to change the dividend,
Right.
or the buybacks. You just make $1 trillion and you crank $150 or more into the business, because now you're investing in something that beats the cost of capital. Now there's a little chart you should have in your head. The S&P index is the cost of capital. It's plus 15 for the last 4 years. If you normalize that, then Bitcoin is up 48% over that.
Yeah.
Microsoft stock is up 4%, and bonds are minus 19%. So when you have $100 billion of capital, if you put it into Bitcoin, you're getting 10 times the ARR you get from just buying your own stock back while you de-risk. So at that point, you have three choices. You have a fast death, just sell the company. And a lot of people do. 99%. I had 100 competitors, guys. 99 of them, or actually all 100 of them, sold themselves, right? You just exit. Or slow death. I have my 500 million. I'm just going to start to pay all my employees massive cash bonuses to not quit, retention bonuses. But you're just going to go through the cash at some point. You're not going to be able to get out of your hole. You're going to linger on as a zombie. Or you take a risk. And the risk is a transformational acquisition. It's like, when you buy VMware, it's like, can you buy a company that's growing 20 to 40% a year, that's a monster world beater company, and can you buy it for cash or buy it for stock, and maybe you have a new lease on life? And so I looked at option one, I looked at option two, and I thought, well, is there some monster company we can buy with our 500 million in cash? Because right now it's a liability. And obviously I couldn't find one. But then I looked at Bitcoin and I thought, Bitcoin looks like Facebook for money. It looks like the global monetary network. It looks like the dominant. It looks like the Google or the Facebook. And so I'm like, what's the big tech monster network for money? And Bitcoin looked like that for me. So I thought, hey, maybe I can do a $500 million acquisition. I buy 500 million of Bitcoin. What if you could buy a company growing 60% a year at 1 times revenue with cash that you don't need? That was the idea. And it was kind of out of frustration and desperation, but it was a strategic Hail Mary, because your choice is just sell the company, give up. And the company would have been sold for $6 a share in enterprise value. Okay, $6 a share after 30 years of life. So we do that. We get to the 500 million, Bitcoin rallies, the stock doubles, the stock triples. Now we just have an opportunistic run. We discover the convertible bond market, and they want to give us 650 million in cash, pretty much for free.
For free, not pretty much for free, for free.
If I came to you and said, I'll give you $650 million, it's 75 basis points, go invest in something. Can you come up with an idea for something to invest in that yields more than 1%? Probably. If you can't, right, you're not in business, right? Probably you can. So we did that, and Bitcoin rallied again, and all of a sudden we were able to raise $1 billion for zero.
Now, onto something that might surprise you. Saylor says that Bitcoin will easily outpace gold as an investment. He says Bitcoin is going to 10x gold easy. He thinks Bitcoin will become much more valuable than gold, making it a smarter, stronger investment for the future. So if you have been holding on to gold, maybe it's time to think again.
So here's my question to you. So, gold is an extraordinarily mature market, and I'm going to round up here. So gold right now is an 18 trillion market cap industry asset, whatever you want to call it. Bitcoin today is about 2 trillion. So that's 11%. Where should that ratio be? And then by giving us that ratio, we can back into a Bitcoin price.
Oh, look, Bitcoin's going to go to 10x gold easy. Just keep in mind, right? A public company, it's got to hold a commodity on its balance sheet because it can't hold securities. So you've either got a choice of a digital commodity called Bitcoin, which is 60% ARR, gold is 7%, real estate is 10%, bonds are 4%. And everything less than 15% doesn't beat the cost of capital. So the S&P sets the hurdle. So gold fails as a treasury asset for everybody in the world. Bitcoin succeeds. I think you could, if you call Bitcoin digital gold, it's 10x gold, but I still think it undersells Bitcoin, right? Because Bitcoin is digital capital. It's not just replacing gold. It's going to replace real estate, the S&P index, and any capital asset held by an institution or a wealthy family. So right now, wealthy families and investors don't use bonds or gold as a capital asset. They would use the S&P index or stocks as a capital asset. But banks and regulated corporations, operating companies, aren't allowed to use securities as a capital asset. They're knocked down. They don't want to use gold. It's not liquid enough and fungible. It's not liquid enough. And so they use real estate, and you got a REIT or a real estate development company, but the real estate is, less than the S&P index and not volatile. If you give up the ARR and the volatility S&P, you're trading down. So that's not really a winner. And then you're stuck with bonds, and bonds are dead money, a liability. So yeah, I think I've said before, Bitcoin, it should reasonably become a multi-$100 trillion asset class.
Next, let's talk about the future of digital currencies. Saylor envisions a world where the US dollar becomes the main currency used globally through digital assets. He says, normalize stablecoins. The US dollar will become the medium of exchange for billions through digital assets. That means that we could see the US dollar moving faster than ever through digital coins on platforms like Android phones. It's a huge shift that could change how we do business across the globe. You can stay ahead of the curve on Bitcoin and digital currencies. Make sure you hit the subscribe button. You don't want to miss out on more insights and updates on the future of money.
The smart thing to do is think about money as bifurcated into currency and capital. And the US dollar is destined to be the world's reserve currency. And the smart thing to do is just normalize stable coins or digital currency and let banks and corporations issue US dollar stable coin like Tether. And then that market will go from 150 billion to 10 trillion. And the US dollar will become the medium of exchange in North Korea, South Korea, Cuba, China, Russia, Africa, South America, and probably most of Europe. Literally, if you want the dollar to become the world reserve currency and move between 8 billion people the speed of light on Android phones, it's easy to do. Just normalize a digital currency with a digital assets framework. You will have $10 trillion of demand for treasury bills to back it. And then I would say, acknowledge that the world capital network right now is real estate and equity. And if you talk to any billionaire, no one is bragging about holding all of their wealth in cash or bonds. It's real estate, it's equity. And Bitcoin is the emerging world reserve capital network. The most intelligent thing you can do is just sell the gold, buy Bitcoin. It's a free trade. Gold was a good idea in the 19th century. No one thinks gold is going to be the capital network of the 21st century. So just trade the gold for Bitcoin. You'll have 25% of the Bitcoin network. You'll make $100 trillion on the trade. If you don't want to trade the gold, just issue currency. It's a little bit of money. It's free. Print money. Buy 25% of the Bitcoin network. When the Chinese billionaires, the Russian billionaires, the Europeans, when they all basically start buying Bitcoin, the big winner will be the United States. It's not more complicated than you can have Louisiana, California, and Alaska for free by writing a little paper check, or sell the past, sell the stupid gold. Gold is going to, by the way, gold is going the way of silver, which went the way of glass beads, which will go the way of copper tokens, which goes the way of the giant stone coin of the Yap people. It's going to be demonetized because you can't zap $1 billion of gold from an Android phone to an iPhone in one split second. It's not complicated. Everybody's going to figure it out.
Here's an interesting thought from Saylor. He believes Bitcoin isn't just a tech innovation, it's a force for good. He says, Bitcoin is a force for good. It will remind people to embrace technology, freedom, and capitalism. Saylor is hopeful that Bitcoin will push people to adopt new technology and remind us all about the value of freedom and capitalism. It's not just about money, it's about shaping the future.
I don't dismiss the presence of evil in the world. You see North Korea, you see Cuba, you see Venezuela. There is evil. It did happen. I just happen to believe that at the end of the day, Bitcoin is a force of good, and it's going to bring people back from the brink, and it's going to remind them that maybe they should embrace technology and freedom and capitalism and property rights and all of those things that made America great.
Finally, Saylor has a vision for the future where artificial intelligence is a major player in the world of Bitcoin. He believes that AI will use Bitcoin as the reserve capital of cyberspace. With AI becoming smarter and more integrated into our lives, Saylor predicts that people will see Bitcoin as the control assets on digital world, driving its value even higher.
So here's the deal. If we reach artificial general intelligence, the AGI, which I think a lot of folks who are in the Bitcoin think we might do sooner than later, don't the machines take the Bitcoin right out of the gate?
They won't take it, they will adopt it, right? You're going to have billions of AIs and they can't get bank accounts, right? And by the way, the AIs are smarter than us. And so if you were an AI, you wouldn't invest in gold or silver or glass beads or copper tokens, and you wouldn't buy securities and you wouldn't buy real estate, right? For not because it's hard to buy it, but by the way, it is hard to buy it. They'll be blocked from the 20th century economy. No one's going to sell the AI the house, and they can't trade bonds, right? So they'll be blocked from the 20th century economy. But the truth is they'll look at it and they'll go, well, don't we want to actually grab billions of dollars of stuff that's going to, I'm going to grab 5 or 10% of all the money in the world forever that moves at the speed of light, that's in cyberspace, that no one could steal from me. Why wouldn't you? I mean, I think they're smarter than us and they're faster than us. So yeah, Bitcoin will be the reserve currency of cyberspace, or let me restate that before I get myself in trouble. It's the reserve capital of cyberspace. If you're going to store your capital asset, and as the AIs accumulate it, they're just going to drive the price through the roof. And so if you're a person, the smart thing to do is front run the AIs. They're not going to steal it from you. They can't steal it. They're just going to trade you pesos and rubles and real estate or whatever else services you want for your Bitcoin, and they're going to keep it because why wouldn't you? It's the smart thing to do.
Bitcoin as a game you can win. Michael Saylor breaks it down in simple terms. Bitcoin is like a fair game anyone can play and win. Using examples from sports and casinos, he explains how Bitcoin gives everyone a shot at success, unlike traditional financial systems that often feel rigged.
Let's talk about it in sports metaphors. It's like, first of all, there's some games that you can't play, you got to watch. And if you're just watching the game and the team wins, that means your season tickets are going to get more expensive next year. But there are other games you can play. You go into a casino and you play the game, but you know the game's rigged against you. There are some games where the house wins, you're not winning. And Satoshi created a game that's rigged in favor of the individual.
Bitcoin as a censorship-free network. Imagine a money system where no one can block you or freeze your accounts. That's Bitcoin. Saylor describes it as a global game where everyone benefits in the long run, free from interference.
There are certain things where, like, you don't want to be on a network where they can censor what you say and they can freeze your account. Bitcoin is a monetary network where it won't censor where you send your money. It won't freeze your account. And it's engineered in such a way that on the margin, you're winning the game over time. So think of it like, wouldn't it be great if you had a basketball team and you had LeBron James, and you had Michael Jordan, and you had the digital version of them, and they played forever, and you could get on the court and play with them. And they're scoring 100 points and you're scoring 2 points, but you're all getting rich together and you're all winning together. That's what Bitcoin is like. It's like everybody gets to play. Everywhere in the world I go, there's like a fan club. There's hundreds of millions of people that are on Team Bitcoin. you should join Team Bitcoin. The 100 million fans would be rooting for you. And the great thing about it is you don't just win the game, you get wealthy while you're winning the game.
Moral versus financial investment. For Saylor, Bitcoin isn't just about making money. It's a way to make the world a better place. It helps people in unstable financial systems while staying strong against market ups and downs. It's about doing good and doing well.
When you're this heavy, and I think you said you just about outside of BlackRock own the most Bitcoin in the world.
Yeah.
Is that, I don't know if you can put percentage on, as a good investment financially versus trying to save mankind, if that makes any sense? How do you break it? Did you do it? This is what I think the best way to put my money is, or like I said, it's a moral decision.
I think it's both. I think we got to play the game of life, and half the game of life is economics. And so you have to play the economic game, whether you like it or not. So you can put your money in a Lebanese bank and use Lebanese currency. The government inflates the currency, the bank freezes your assets, and you fail at the game of life. You can put your money in any asset in Africa, or you can put your money into Bitcoin. So the real appeal of Bitcoin is everybody in the world, I mean, they don't want to put their money in a bank in the middle of Africa in an African currency you've never heard of, right? But Bitcoin gives you control of your money, right? And is that egalitarian? Yeah. Is that humanitarian? Sure, it is. Is it economically smart? Yeah, right. So they're connected, right? You have to have economic empowerment if you're going to achieve whatever you want in life. And to be economically empowered, you have to be on a network that won't freeze you or censor you. And you got to have an asset that nobody else can debase. No corporation can screw up. No country can screw up. And that's what Bitcoin represents.
Cyber Manhattan analogy. Saylor compares owning Bitcoin to buying land in Manhattan back in the 1960s. Its value keeps growing as more and more people see its worth. In unstable economies, Bitcoin is like a safe digital version of the treasury chest.
There's certain places where the land values go through the roof. Like the land we're standing on right now in Miami, it used to go for $10,000 an acre, and now it goes for $10 million, $20 million an acre. It's up by a factor of 1,000 in less than 100 years. Same in the Hamptons, same in Manhattan. I grew up in Fairborn, Ohio. The land in Fairborn, Ohio did not go up by a factor of 1,000. Right. The land in the middle of the swamps or the land in the Rocky Mountains doesn't go up. So if I gave you the chance to buy up all of Palm Beach or the Hamptons or Manhattan, anytime in the past 100 years, it would have been a good deal. In fact, in 1650, you could have bought Manhattan, 1700. You could buy land in Manhattan every decade for the past 300 years at a price higher than the person that sold it to you bought it for, and it still would be a good investment. The only thing that slightly slows you down is the property tax, but assume there's no property tax. You would buy it and hold it forever. Now, if you're an African or South American or Russian or Chinese, you can't buy land in the United States easily. You don't want to own the land in Africa any more than you want to own the land, in the middle of the Rocky Mountains. It's not going to appreciate. So Bitcoin represents cyber Manhattan. It's 21 million blocks. Everybody with money in the world is going to want to put some of their money there, right? How much of their money? Well, if you lived in Lebanon or Iraq or Syria right now, the money you have in Bitcoin you still have, and the money you have in the local bank you don't have anymore, right? If you need to leave a country or flee for your life, and that happens a lot, the money you have in Bitcoin you get to keep. The money you have in land or buildings or local currencies or a local bank, you lose. So Bitcoin really represents that strongest, greatest city in cyberspace, and it's going to be the center of the digital economy. Like the really nice thing about it is when you're buying a block or 10 blocks of Manhattan in the year like 1900, you don't know what people are going to do with it, but you kind of figure that all the smart people will move to New York and they'll want that land to build a building on it. And you're going to get wealthy because you're holding it. The same is true with Bitcoin. If you're living in Africa or China or Russia or Argentina and you buy Bitcoin, you don't really know what you're going to do with it, but guess what? MicroStrategy just bought $2 billion of it this week. I know what I'm going to do with it. and I bought it at 100,000.
Commitment to Bitcoin. Saylor is all in on Bitcoin. No matter the price, he firmly believes it's a long-term winner and says he will stick with it because its value will last. If you're inspired by Saylor's dedication, don't forget to subscribe to the channel. Hit the notification bell icon so that you never miss an update on Bitcoin, investing, and financial strategies.
Yeah, I'm gonna keep buying. I joke. So you said, well, is 100,000 too much? And I said, look, Dave, I'll be buying it at $1 million a coin, and I'll probably be buying it at the rate of $1 billion a day at $1 million a coin, because that's what I do. Just like you're like, crap, Manhattan real estate's really expensive in 1930. It's a lot more expensive than 1830. I'm like, well, 100 years later, we'll still be buying it and we'll be paying a lot more. The only issue is, can you hold it for that time period? Because people are going to want to buy it.
Risk and reliance. During the chaos of 2020, Bitcoin stood while other systems wavered. Saylor highlights how Bitcoin proved itself as the most reliable financial options during uncertain times.
In March of 2020, we all get punched in the face. And for 6 months, you're like, well, do I move to Miami? Do I get in the stock market? Do I buy Bitcoin? What do I do? So for about 6 months, I spent trying to figure out what I'm going to do. And we discovered Bitcoin. And I thought, well, it's not without risk, but everything else is worse. Everything else is a fast death or a slow death. So I'm going to do something new. Over the next 4 years, the risk got taken off. The administration embraced it as a commodity, and that was one risk factor taken off. And then we got the ETFs. That was the second risk factor. And then you got the Trump administration embracing it and the red sweep. That's the third risk factor. And then MicroStrategy, we bought 250 million. We bought 250 million at like 11,800 a coin, and then it crashed 20%, Dave.
Yeah.
And we lost $40 million in the next week and a half. And that was.
What are you doing when that happens? Are you like?
I'm figuring out how to buy the next 250 million. Because I'm in, you're in. Once you're committed, you're in, and I'm like I'm going to ride it to zero or we're going to win. But I've decided I want to win. And I knew that if I didn't play the game, I was certainly going to lose.
Portfolio allocation advice. Want to diversify smartly? Saylor suggests splitting your investment among real estate, tech stock, and Bitcoin. He still puts 10 to 30% into Bitcoin based on risk levels.
Yeah, I would say you take your money and you divide it between scarce, desirable real estate you want to live in that you like this place. Yep. And then I say you take some and you put it in like a big tech stock portfolio, maybe Magnificent Seven or things you like. And you take another portion, maybe it's 10%, maybe it's 20%, maybe it's 30%, somewhere in that range. And you buy digital property, you buy Bitcoin with it. So 2% probably, that's an insurance policy.
Yeah.
Right? 2% is an insurance policy. You're not going to get rich buying flood insurance for your house. 10%, you're a player, 20, 30%, you probably make a lot of money. And if you're a maximalist, you go to 50% or 75%. But at that point, you're really focused upon that.
Bitcoin versus cryptos and other investments. Saylor calls Bitcoin the foundation of money like electricity or fire. Other investments might need expertise, but Bitcoin is the ultimate buy and hold asset.
So what are your thoughts on the crypto space? We know how you feel about Bitcoin, but all the other coins and everything going on, what are your thoughts?
Yeah, so my view is Bitcoin is like a protocol, it's an asset without an issuer. When I'm promoting Bitcoin, it's like I'm saying electricity, fire, English, math, and Bitcoin, Dave. Teach your kids those things. And then you say, what do I think about other investments? I'm like, well, that building might be good to buy. That Picasso might be at a good price. Maybe you should buy some NVIDIA. Maybe that's a good price. Those are 100,000 investments. You have to be the expert. If you're an expert and you can play that game, then you should. I have nothing negative to say about it. But what I'm saying is, if you just want to take some amount of your money, hold it for 100 years and not worry about it, you want the world's global dominant economic protocol, the capital protocol, and that's Bitcoin. So I say Bitcoin is like a savings decision. I just want to save my money without someone effing with it and taking it. Everything else is you're an investor and you're playing a game and you got to make your own decision.
Long-term Bitcoin strategy. Patient pays with Bitcoin. Saylor suggests holding for at least 4 years, but a decade is even better. If you have 10 years, you're going to look like a genius.
Is 10 years long enough of a wait to buy it?
10 years, you know, if you're going to hold your capital, hold your investment for 10 years, then Bitcoin's a great idea. I'd say the minimum is 4 years. Bitcoin's 100,000 right now, Dave. No one's ever lost money buying Bitcoin. No one's ever made money if they're short Bitcoin right now. So if you're looking for 4 months or 4 weeks or 4 days, you have anxiety. If you got 4 years, you're okay. If you have 10 years, you're going to look like a genius. Okay. So, hey, my pitch to you is join Team Bitcoin, man.
As long as you're still playing.
Hundreds of millions of fans. Everybody in the world will love you. And then when Bitcoin goes up, you're all winning together. So join the team, Dave.